The Bitcoin price has been on a tear lately, up almost 20% in the last week. Check out the famed Bitcoin Fear and Greed Index. It's crossed into neutral territory from fear for the first time in almost 9 months. It's a pretty significant milestone. Today we'll get into some technical analysis and discuss what could happen next. Will the rally continue? Do you have some ETH staked on the Ethereum 2.0 release? Well, it's about to get unlocked soon. The Shanghai Ethereum release is coming soon. Keep watching to find out about all the good it's going to bring to ETH holders. All this and more in today's crypto news, but first hit that like button, subscribe to the channel for regular crypto news updates, and let's get into it. Bitcoin has been on a tear lately, seeing almost 20% of price increase in just over a week. It's pretty significant. In Australian dollar terms, that translates from about $25,000 all the way up to $30,000. This comes after news that El Salvador has passed a law to issue government bonds on the Bitcoin network. There's a possible small correlation there. The US dollar index has also flashed a death cross, which may indicate it's headed lower, as day traders know the DXY correlates inversely with crypto prices. So a lower DXY usually correlates to an increase in crypto prices. The death cross is a price pattern where the short-term price indicators, which are here in red, cross the longer-term price indicators, which are the purple and the blue ones, indicating a reversal pattern is playing out. However, given the shaky ground around Digital Currency Group and its juggernaut subsidiaries Genesis and Grayscale, and the FTX drama that's still unresolved, I wouldn't get my hopes up around a sustainable, dramatic rise anytime soon. Any day now, more of the contagion could unfold. It's still very risky territory, but nonetheless a great time to be watching the markets. The indicators are starting to look good, but we aren't out of the woods just yet. The famed Bitcoin Fear and Greed Index has flashed neutral for the first time in almost 9 months. That indicates a possible turnaround. I'll link to that in the description below. It's a great resource to bookmark if you're a day trader. I'd highly recommend that. The 50, 100, 200 day moving averages have been meaningfully crossed for the first time since June last year. Another positive flag to keep an eye out for. What we're looking for in terms of price reversal is the crossing of these major lines of price support. If we can smash through the 21,500 price point on the USD chart, then we'll have a bit of hope that the bear market can be turned around. Bear in mind at this point that we could still easily see a reversal back down to lower lows. However, if we do cross the 21,500 and we see a confirmation with a bounce on the other side of that support, then we could test the higher rungs from there. So that could be the green light case that's here. Is it a bull run or a bull trap? That's the big question here. Typically, a bull trap is a false price rise that isn't met with a decent amount of trade volume to be sustainable. There are great arguments on both sides right now, so it's a wait and see kind of situation. Given the overall macro climate suggests there is still more pain to come this year with higher rate rises to combat inflation, I wouldn't get my hopes up too far. However, you never know when the crypto markets will begin the inevitable decoupling from the traditional economy. So the action that's going on in El Salvador is a great marker of the decoupling that's going on, but there's just too much unknown to discern for the time being. What do you think of the current prices? Are we headed higher? Is the bear market coming to an early close, or is this just a dead cat bounce that will eventually take us to lower lows pretty soon? Let me know in the comments below. Keen to hear what you think. Staked Ethereum is going to be ready for withdrawal soon. The stakers of the Ethereum 2.0 upgrade have had their ETH locked on the network for many months now, as they keenly await the release of the Shanghai hard fork this coming March, which will enable staking withdrawals for the first time since people began staking their ETH in 2020. Ethereum holders were first allowed to stake their ETH for the 2.0 upgrade in November of 2020. Since then, the staked Ether has been locked on the proof of stake network, but that will be changing with this update, which releases the proof of stake ETH onto the Beacon chain. Another long-awaited feature, proto-dank sharding, tagged EIP 4844, just missed the cut for this release. Proto-dank sharding will be a first step to vastly improving the scalability of layer 2 solutions on Ethereum. This was pushed back to the next release late this year. Also, Ethereum has just crossed the line into deflationary territory, making it ultrasound money. The recent upgrade to 2.0 has changed the properties of the cryptocurrency, vastly reducing the amount emitted onto the network and increasing the amount that is burned through fees. So this has transitioned it into becoming a deflationary currency, which philosophically speaking makes it a much better form of money. So in theory, this should translate to better prices down the track. Like, this is really great for economics nerds who look at this and say, wow, that's going to make it really valuable. It hasn't translated to the market price just yet, but keep watching. Definitely gives it a good investment thesis. If you haven't already, make sure you hit that like button and subscribe for regular crypto news content. India historically has had a bit of a hostile relationship towards crypto adoption. The central bankers in India have called for an outright ban on cryptocurrencies, saying they could undermine the stability of the Reserve Bank, the RBI. The RBI recently launched its CBDC in an effort to minimize the monopoly of cryptocurrency in the country. Reserve Bank of India Governor Shaktikanta Das stressed that cryptocurrencies are nothing but gambling and that their value is nothing but make-believe. Isn't that interesting? The central banker doesn't want you to believe that the competition has any value. Well, if anything, the cryptocurrency movement is teaching us it's that value value is subjective. That doesn't mean there's nothing valuable about it. It just means that it's for each of us to determine on our own rather than be dictated to us by an institution. We don't need a central authority to tell us that something is valuable. It's possible that before crypto, we just weren't aware that that's how we've been living. Things can only be valuable when institutions bestow value upon them, and then the public is allowed to have that in their conscious awareness. The whole internet movement has arguably been about flipping this model on its head. People on their own are now in a state to make these choices and should maturely be given that opportunity. Of course, this was going to ruffle the feathers of people whose worldview and jobs are aligned with the old way of doing things. Nonetheless, you can ban crypto all you like, it's not going anywhere, and at best you're going to set your country back behind the rest of the world while we all leap forward. It's too late now, the movement has gained too much steam already to put the genie back in the bottle. Better to stack more Bitcoin, India. And that's all for today's news. I'll see you next time for another update.